Hi and welcome back to Cheeky Crypto Podcast. My name's Chris and it's fantastic to have you back with us for another Cheeky Crypto Podcast. And in today's podcast, we are going to take a look at the FOMC meeting, sort of give you my thoughts and opinions on everything that was said there and what we're likely to expect. We're going to dig into Binance and the agenda that appears to be there from the US. We're going to dig into that and my concerns around that aspect of things. And we're going to go into some of the macro stuff, stuff that's happening outside of the crypto space that, has the potential to impact it negatively and sort of, cover off my reasoning as to why I kind of feel that this is just a bear market rally and not the start of a bull market. Lots of people have this, this narrative that we're in a bull market and, we're off to the races. And neglect to see what's actually right in front of their eyes, in my opinion. But it is just my opinion. Everybody's got one. Take it with a pinch of salt. Treat this as educational purposes only. I'm no financial advisor. Right, let's get down to the desktop. Don't forget to mash up that like button if you enjoy the content and you want to support the channel. Subscribe, tap that bell, select all the notifications so you never miss a video. But let's get into the market and have a look here first. So we've got today's crypto market prices by market cap. We're at 1.10 trillion, up 0.91% in the last 24 hours. Bitcoin hovering just below 24,000 at 23,996.85, up 1.11% in the last 24 hours. So that kind of gives you a bit of a flavour of what's going on in the space. And, basically in a nutshell, it's just some sideways movement. The FOMC meeting didn't really have too much of an impact on the market, which is a bit of a surprise bearing in mind what's been said, but it was very well articulated not to spook the market, I feel. But let me know your thoughts and opinions in the comments below. Let's sort of dig into that now. And we've got Fed inclined towards more hikes to curb inflation, minutes show. And this is basically, and I'm not going to get into the full article, but basically, in a nutshell, what's been said in this meeting is pretty much echoing everything that I've kind of been saying on Cheeky Crypto, the main channel, the podcast, in our weekly AMAs with, our two frequent weekly AMAs that we have in our Discord with Patreon members. And that is the macro just doesn't look good. And we haven't really experienced the full pain just yet that we expect to feel. And risk assets are not going to be the ones that go on to do really, really well. And in the previous two podcasts that I've done, I've highlighted the fact that 𝗕𝗘𝗪𝗔𝗥𝗘 have alleviated or fired 20% of their staff. That does not look good, but it is in line with other tech companies. You see in this with like Facebook, Microsoft, Amazon, Meta, like the list goes on and on, right? This is the tech industry. This is what happens, right? 𝗕𝗘𝗪𝗔𝗥𝗘 is another one that I highlighted in yesterday's podcast. And I expect to see more and more and more of this. So just be aware that, this stuff is not hiding. It's in plain sight. You're publicly being told about it. And if you choose to ignore it and not have good risk management, expect to be in a position like many people were with the likes of, the collapse of Luna, the collapse of FTX, because, ultimately that had a big impact on the market in a negative way, and the market's pulled down to new lower lows. And I expect something similar to happen. Maybe it's not an exchange. Maybe it's just, a macro. Maybe it's a war. Maybe it's just that, inflation can't be curbed and stuff like that. So I just want people to be aware of this stuff and at least acknowledge it. I think it's mad to not be taking profits. I've been taking profits. It's just my opinion. You do you. I'm going to do me. But, profits are for taking. We're here to make money. And, I guess what I don't want to be hearing, in a few months' time, because I don't think this is going to be a quick scenario where, like, in a few hours or a few days, we have this massive pullback and we see new lower lows. I think this is going to play out for some time, and that's pretty much what was said in the FOMC meeting. Is expect some hikes, some big hikes. So my opinion has been, and I've been publicly airing it, that the Fed messed up last time round. That, or they're deliberately trying to eke it out longer. So that's kind of my thoughts on it, but let me know yours in the comments below. There's a lot of people that make comments telling us to stop FUDing, telling us that we're wrong, telling us that this is the start of the bull market. These people were the same people that were saying it back in June, when that was the low, even though this guy here called that the June was going to be the low. I got that right. But we're still going through that. We were wrong when we said in June, once that low came in, that wasn't the actual low, and to expect a new lower low. We were told we were wrong. We were told about all these magical indicators, and basically that we were told wrong, and we're being told this now. And how many times have you got to be right before people realize that we're not trying to shill you something and trying to get you wrecked in this space. We just have really good, strong risk management, and we want to be successful. And I do believe that we are already successful, but we are going to be even more successful in the future. And if you want to be part of that, then go do your research, because it's all on you. You've got to make your own investment decisions based on what you read and who you listen to. And what you find, right? What resonates with you. This is all on you. This is about ownership, accountability, and whether you choose to pull a trigger or not pull a trigger. This can't be held on influencers and people that you follow. You've got to make those decisions yourself. But the biggest decision for me is who you follow and who you listen to, and what narrative you follow. Are you just following a narrative blindly, or are you actually looking at it and going, oh, okay, like this is all factual stuff and it actually aligns to my way of thinking? Or are you just basing it on what somebody says? Ultimately, it's your decision, whichever way you go. So we've got this here. We got Bitcoin volatility increases as Binance closes some of its Aussie derivative accounts. So this is something interesting, because again, I talk about the narrative when it comes to the Binance, and the narrative is that Binance is evil. They're doing all this corruption, and I'm yet to see anything that actually backs up any of this with something of substance. If you've got it, share it with us in the comments below. But at the moment, all I see is talk, and talk is cheap, right? It's all like the stuff when we're told we're wrong, but nobody can actually back it up with anything concrete. It's all about how they feel. And really needs to have some substance. So share that. That's my opinion. So looking at this, we've got ZZ responding. Users will be compensated, if I can get my words out, for any loss incurred during the forced close of positions. Protecting users is number one priority at Binance. So basically, this isn't something that should be a surprise for anybody. This is something that was actually forced upon Binance by regulators and was publicly talked about back in January, at the latest one that I saw. So this shouldn't come as a surprise. Obviously, there's going to be lots of people worried and scared about it, and I think this is possibly responsible for some of the price action that we saw with Bitcoin yesterday, with that volatility. I think it may have been from this, but ultimately, Binance are looking to do the right thing by their users, and I think that's a real positive, as long as it's true and that actually transpires to actually be actionable and seen by the individuals that potentially had their positions closed and lost money, right? That's the main thing, right? So look, I have concerns when it comes to Binance. My main concerns are that there is a really big agenda. I haven't seen anything that makes it concrete to me. No real substance, just talk. People trying to position articles to make Binance look in a certain light, but they haven't been able to actually say, right, okay, like commingled funds. They haven't been able to prove it. There is no substance. It's just somebody saying they're doing this, but I haven't got no proof. And that for me is just not good. But what I would say is the agenda is strong. It's not just from the SEC, but it's also out of New York now. I have concerns that, this will, happen around the world. We're seeing obviously Australia, and I think we will see more of it. You're seeing, the US closing the doors to being able to get fiat on through bank transfer and stuff like this. Binance is saying it's a really small percentage, like 0.01% of customer base. But it's not looking good. And what happens if that then goes into other jurisdictions and stuff like that? So I have concerns, and it's really about the the risk aspect of things for me. It's not really about Binance or whether they're actually committing any fraud or doing bad activity or anything like that. For me, it's just really about risk. It's about protecting my wealth. It's all about me and our community as well, right? Because if I feel a certain way, then I'm going to air it with the community. So I am off all of the exchanges apart from 𝗕𝗘𝗪𝗔𝗥𝗘, which is where I use my trading. Links are in the description if you want to join 𝗕𝗘𝗪𝗔𝗥𝗘. But outside of 𝗕𝗘𝗪𝗔𝗥𝗘, I'm off all exchanges and all on Ledger hardware wallet. And again, there's an affiliate link for Ledger in the description of the video. Now, it's really, for me, I love Binance. I think they're great. I use them regular. But it's all about risk for me. It's like, do I need to hold the risk? No, I don't. I don't need to hold that risk. Why would I? So why should I? So I alleviate the risk, and it's just good risk management. Now, other things that I want to talk about when it comes to my reasoning, and I want to look at BUSD. Obviously, that Paxos are being sued by the SEC, saying it's a security, all that sort of nonsense. But we have seen a lot of movement away, and I'm not concerned around like the redemption aspect of things or anything like that. But I am forward thinking in the respect that, as 𝗕𝗓 has said in posts on Twitter, that he will, or they will, as in Binance, will move away from BUSD pairs and so forth, and they've been actually accumulating more other stable coins themselves, I guess, for that transition. I personally feel that it's just going to become a bit of a hassle, and I'm going to need to move away anyway. So why not move away now and move into a different stable coin? So I have moved out of BUSD, which was my preferred crypto stable coin, into USDC. I think that for me that is the next safest one outside of anything Paxos. So that's what I've done. But this gives you a bit of a weekly update on the stablecoin market. Decentralized versus centralized, as up 0.18%. We got here, so we got USDT is the top, and then that's closely followed by USDC. And if we have a look here, we've got all like the ones that are in the ranking. If I just actually go back, I think I missed that. BUSD is down 18%, which is massive compared to everything else here, right? So again, just the reason why I wanted to come away from BUSD. Again, I reiterate that it's not because I have any major concerns. It's just really about like just reducing risk, and also just being in a position where if I want to go at some point, once we've actually truly bottomed, in my opinion, or we've had that confirmation of a trend change, then I've got the capital to just put into the exchange, and the pairs are there. I don't want to be 6 months down the line, 12 months down the line, looking to put my stables onto Binance and then realize that there's no BUSD pair. It will just be an absolute pain. So that's kind of like my forward thinking kind of side of things, sort of looking to take over. But let's get into some of the macro stuff around why I feel that the bottom isn't in, and to expect lower lows. Outside of just the crypto stuff, the fact that the whales are not buying, we're at like record lows for whales since 2015. I think I could be wrong on that, but we covered it yesterday. So let's get into some of this. We've got the US home sale post 12-month straight month decline. House prices, inflation cools. So this is basically the property market is going through a bit of a tough time. The US housing market declines by $2.3 trillion in 2022, the largest drop since 2008. You're not hearing this stuff anywhere else, right? Particularly on crypto channels. I think we need to be aware of it. That I don't really want to talk about. We've got Q4 2022 business bankruptcies highest since 2015. So this is out of Europe. I think this is going to get far worse, not better. But I want to be really clear that the pinch is being felt, but I don't feel that everybody is feeling it just yet. It's not as bad as it's going to get. So, I want to sort of highlight this stuff to people. We've got 1 in 5 retailers fear for the survival amid energy crisis. Look, that's just one aspect, right? What about the fact that they're going to have supply chain issues, overstocked? The prices are going to have to be dropped. They're going to potentially make losses. I think it's going to be the survival of the fittest when it comes to retail. I think that there's an awful lot of pain still to be felt in the retail sector. So, it's one to keep an eye on. And then the other one that I want to talk about is the used car market. In the US, it has fallen, but don't expect the same to happen in the US. I found this quite interesting. Basically, we've seen prices crushed by 14.9% compared to the same the same month last year. The largest drop since the 1990s on the second-hand car market. And this is a market that the Fed are saying haven't really, felt the complete pain just yet. And I completely agree with that. And I'm going to round up with my thoughts and opinions in a moment on this side of things. But then we've got the stats show the UK used car market shrunk by 8.5% in 2022. So it's going to have shrunk even more in 2023. So look, there's all this stuff, all this narrative of bull markets and all this positive stuff out there, but I'm telling you now, right, in my opinion, we're expecting lower lows. We're expecting more pain. And I don't think it's going to be quick. And I think the higher we go, the lower we're going to go. And ultimately, people should be looking at, the macro, I think, is going to be the most important aspect when it comes to investments in risk assets. And crypto is a risk asset. I would love for it to be a bull market. I'd love to be wrong. But at the moment, I'm just not feeling it. And you can call me a bear, but at the moment I am ultra bullish on crypto long term. But in the short term, I am very, very bearish about the macro. And because of that, I just cannot see how this is a sustainable move to the upside. And for that reason, I think it's good to take profits. Obviously, it's just my opinion, and that's what I've been doing. Not financial advice. Treat it as educational purposes only. You do you, I'll do me. Do your own research and see what resonates with you. But these are my opinions, my thoughts, and ultimately, I believe that I am going to be so successful in this space. And eventually people will realize what we're talking about and what we have talked about over the last 12, 18 months has been pretty much bang on. Really like the fact that the FOMC meeting notes really did sort of replicate everything that we've been talking about on this channel and what to expect. And expect those hikes to come in, expect the market to be even more volatile, but expect this to play out over a length of time, and it's not going to be quick. I hope you enjoyed today's video. Mash up that like button, subscribe if you haven't subscribed already, tap in that bell, selecting all the notifications so you never miss a video, and I will catch you in the next one. Take care.